All right, thanks, Daryl. As per usual, I'll do a quick sound check, make sure you guys can hear. All right. Good evening. Yeah, we're kind of. I saw some. It's. I mean, we're kind of stupid, in a good way, because I think most of the time when there's webinars, they're all pre-recorded. For whatever reason, we do them live. I don't know why. I mean, our life would be probably a lot easier if we just did one webinar as a pre-recorded message and then just did that. But I think part of it is that it's just the markets. So if you're talking about the markets, to me, talking about the markets in terms of what happened last week or the week before is irrelevant and useless. You've got to talk about what's happening right now. And the only way to talk about what's happening right now is to do it right now. So anyway. Yeah, for sure, for sure. So let me get my drawing tool going here, and let's get started here. So yeah, and these are always recorded. You know, the funny thing is I think at some point we're going to do a list of our top 10 either frequently asked or most asked questions. But we do record every webinar, and that is probably the most frequent question we get is this webinar being recorded? And then what stop should I use? Those are the actually two most common questions. Yeah, no, I actually look, and I enjoy this stuff. I learn by doing. So this is good too. So anyway, there's that. And then one of my processes here is I've been trying to create a welcome page that has welcome in every language. Now I know I'm missing some languages, but I'm trying my best. Last time I did have somebody tell me that I was missing Klingon. So I believe that this is Klingon right there. So anyway, just making sure that we got everybody covered. That's funny, Jonathan. All right, so let's just dive into this. Yeah, and so what I do during the classes is that I have people from obviously all over the world that are interested in trading, which by the way is one of the things I love about trading. I was at a cocktail party not too long ago, and I mean I've got a lot of different friends, different political views, different races, different outlooks. I mean, it really doesn't matter. I mean, this is Austin, Texas. Everybody gets along. And but what's interesting is that people sit there and argue about their political views and argue about wherever they live or their part of the world or what this country's doing. But when it comes to trading, everybody is on the same page, right? There are no differences when it comes to trading because we all have the same goal in mind. We want the freedom that it creates to provide freedom for ourselves, for our families, and all that stuff. And so anyway, that's part of why I love it, because you can have all these diverse opinions, you can have these point of views that create arguments and destroy families, but when it comes to trading, everybody's aligned and everybody's on the same page, which I love. So I think that's cool. Gotta throw another shrimp on the Barbie. All right, so why are we here? And we're just going to dive right into this. This is more of a, we're just, so for those of you that are newer, I mean, just the general keys to becoming a top trader, if you didn't know, is, and here's the thing, the biggest scam on the planet out there right now is that, banks will sit there and say that, getting 2% a year is a good rate, or 1% a year is a good rate. And it's stealing. And if you have a little bit of knowledge and you want to trade conservatively, it is a piece of cake to get 20% a year, okay? If you want to get more aggressive and focus on what I call 2.5% a week, then you're talking about 120+% a year, only risking about 10% of your capital, okay? So I hate banks. I despise them. So anything I can do to have people take money out of banks and take control of their own finances, I'm for. So, and no offense to any bankers, I obviously work with banks. So it's, but I'm about the individual and what the individual just kind of taking control of their finances. So develop or utilize proven trading setups and systems as part of your daily money-making routine. And then more importantly here, we'll talk more about this too, is just knowing when to stand aside. One of the biggest questions I'm getting right now is like, the markets are rallying, but God, they're kind of scary. You know, how much do I bet? I'm only 20% invested right now. That's 80% cash. Okay. When you're this extended, and I'll talk more about this, this is how you survive in this kind of area, because on the days when the NASDAQ's down 100 points, like yesterday, you've got 80% cash to take advantage of those opportunities. And when you're extended like this, the odds of those opportunities happening increase exponentially. Okay. And I'm going to show you exactly what I'm talking about. But that's the kind of stuff that you've got to know, right? Or you're screwed. Knowing when to trade normally and conservatively, and knowing when to hang on for a bigger trade. Okay, that's part of it. And then knowing what the computer generated algorithms are following so you don't get run over by them. So a couple things like that. So what we're going to talk about tonight. Now, just as a question here, I recently did a class that utilized some of these tools. So how many people here were not in the class? Because I know some of you were in the class and some were not. I just want to get a sense of how many people were not in the class. Okay, no, that's awesome. So what I want to do tonight is just talk. So during this class, we did some trading, and by the second day, we made a ton of money. And I just want to show you just the tools. Like, look, here's the tools. Take from this what you will, and we'll just dive right into it. So one of the setups that we looked at was PayPal. Okay, and so one of the key things here with the stock is, let me see here, get my pen and color. So one of the key things here with the stock is that you've got obviously a huge uptrend going here, okay? And if you look up here, you're going to see 18 rows, and you're going to see here that the monthly and the weekly and the 4-day and the 3-day and the 2-day and the daily and the 4-hour are all green, okay? Now, what that means, and in this case, is it measures a short period moving average and a longer period moving average. And all this means is that the short period moving average is trading above the long period moving average. Very simple, right? But if you can see that the 4-hour through the monthly is all positive, you're going to know without having to actually go and physically look at all those time frames, right? This is a 1-minute chart. I don't have to go look at all those time frames to know that this is in a strong uptrend. And that then when I see that the 3 and the 4 and the 5 all the way through the 2-hour chart are actually crossed down, where the fast moving average is below the slower moving average, I know without looking at the chart that we're having a pullback, okay, on the weekly chart. And then all I got to do is wait for the smaller time frames to turn up again. And then you're going to see it's almost like an accordion. And then it just rolls back up to where they're all green, okay? And this represents one of the best rolling opportunities out there. And it's so simple, but up to now it's been impossible to do without that tool. And so during the class that we recently did, and this was just a couple of weeks ago, these are some of the positions that we put on. Now, not all of these worked, all right? This one did not work. This one was dead money until yesterday when the markets gapped down 100 points, and then we're able to flip it out. Still have the PayPal calls, still have the Shack calls, still have Zen. We closed these out. These were day trades. Visa hit our target, Baidu hit our target, and then we had some of these as well. And so by day 2 of the class, all these positions were up $42,000 with some big moves in Baidu, some big moves in Shack, and then you can see some little moves here and there. Not all of these were making money. KBH was losing money. The VIX hedge was losing money. And by the way, when you have a hedge on, you actually want it to lose money, right? Because the whole point of the hedge is to be in case the proverbial shit hits the fan. So if your hedge is losing money, that means all of your other positions are making money. Okay. So on the day that your hedge is making, like, oh my God, my hedge is up $10,000. That's not a good thing. I mean, it's great because you're hedged, but it also means that all your longs are going to get killed. So just keep in mind, that was a big question that came up. It's like, oh my God, this hedge is not working. Great. That's your insurance. But then on Thursday, it did work, and it was super helpful. That's great. Yeah. So what I want to talk about tonight is just kind of the strategy in today's market environment, because the market does continually change, and we have a very unique market right now, is that in today's market environment, how do we structure our portfolio? And this is really what it comes down to, because yeah, it's nice that Baidu was up $14,000, right? And it's nice that blah, 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 but it's really your portfolio. If your portfolio is structured correctly, then on a big down day, you're not going to freak out. Okay. But then, and you got to understand, when I say a big down day, I love to short. Okay. I love to short. The markets you can make a lot more money shorting when you're right than the upside. But this is not a high probability shorting market at the time. So a lot of the positions I'm talking about right now are long. So I'm assuming that the uptrend is going to continue, right? But at some point, I'm going to be aggressively shorting. So just understand that when I say, yeah, there's going to be times when it's moving down when it's fantastic, right? But right now, I'm mostly positions that I have are long. So right now, I'm 80% cash and I'm 20% mostly long positions with a couple of small hedges, right? So if we do have some big down days, first of all, I've got a hedge in place with those VIX calls, and I've got 80% cash. And so yesterday what I did was I picked up a bunch of Amazon on that downturn and flipped it on the upside. So we're going to talk about that. So anyway, the whole idea with this, and that what these tools can help you with, is it's not so much about what's the next trade. Okay, that's part of it, but really it's more about how do I structure my portfolio for the maximum benefit to myself in any market condition. Okay, so that means a couple of things. First of all, you'll notice that this is about the maximum amount of positions that I'll have. Okay, so I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 positions, some of them bigger than others, depending on the setup. So the main thing here is I obviously do not have my entire account bet on one trade, and two, I also don't have 40 positions. I think if you have 40 or 50 positions, it actually is not only very difficult to manage, but you almost offset, you'll have 20 winners, 20 losers, that kind of stuff. So I personally, this to me is kind of a good sized portfolio. All right, so here's how we do all this. So one of the things I find, especially in trading, is that everybody kind of has FOMO, and that FOMO is kind of that fear of missing out. And we've got to be able to manage that, because if we can't manage that, then what happens is we jump from position to position without following a plan, and we start chasing a dopamine hit. Okay, so here's your current trade. It's like, oh man, look at Tesla over here, and now I'm going to dump this current trade, which was perfectly fine, and go over here. And you've got to be very, very careful about that. And one of the things that you can do is have tools in place that help you stay in line. Okay, because the human animal by itself, the human brain by itself, you got to remember, the brain's primary function in a human being is to constantly scan your environment for danger, for food, or for a mate. Okay, that's how we're wired biologically. And if you are unconscious of that, then what's going to happen is you are going to be looking at the market from that same point of view. Now, the market may not make a good mate, but there's certainly plenty of things to fear. There's plenty of, in terms of, grabbing things and stuff like that too. And that's what this comes in. So you need to have tools to kind of help you manage those natural human tendencies, okay? So the beauty of this stuff is that I'm talking about here is that it's very, very simple. So one of the things that I really like to utilize is a very simple moving average crossover, okay? And it's the 5 is what I use as the short moving average, and this is the EMA, or the exponential moving average. And then the longer one I use is 21, okay? And that's the longer, and I do use EMA. Now, you don't have to use these. Other combinations, of course, are 8 and 21, 8 and 34, shorter one is 5 and 10. But this is what I use. So the idea with this is that if the 5 is above the 21, okay, and if you think of this on any time frame, the 5-period moving average represents the day trade. So on a daily chart, it represents the day traders. And if you're familiar with the term point of control, it's almost like the point of control for the day traders. So, they're buying that pullback, and then if it breaks, it's a watershed decline. And then the 21 is kind of the point of control for the swing traders. Now, this is why the black box systems operate on these crosses. So if you get the price, so notice here, see how price drops below the 21, but the 5-period moving average does not? Oftentimes that'll slingshot higher. However, when the 5 crosses, that's typically then you get the dump. So when you get that cross, like a 1 bar down cross, it actually signals a lot of black box systems to sell. So you've got to understand this, just because, you know, the world is running on algos, and the algos are looking at this. So the bottom line here is that these moving average crosses, which are very, very simple, are important, all right? And they provide just like what I like to refer to as high probability moments in time that show a fundamental shift in both psychology and, more importantly, order flow, okay? And better yet, they work on all time frames. And if you want an edge, okay, and an edge is simply meaning giving you a higher probability of success. If you want an edge, then you need to be able to watch multiple time frames, and then you can see how these time frames roll from the small 5 and 10 and 20-minute charts to the larger 2-hour, 4-hour, and daily charts, okay, and vice versa. This can all help a trader see and have confidence in a larger movement developing or petering out. So it's, you know, hey, when to get in, when to get out. So what is the main problem with this? So the main problem with this is that if you don't have the right tools, then you've got to essentially set up a screen like this so you can see the monthly chart, the weekly chart, the 4-day chart, the 3-day chart, the 2-day chart. By the way, these 4-day, 3-day, and 2-day charts are gems, because there's a lot. Everybody's looking at the weekly chart and everybody's looking at the daily chart. There's a lot of good setups that happen in between those two that nobody looks at. Some of our best setups are coming off these 2- and 3-day charts. But then you also want to know the 4-hour chart, the 2-hour chart, the 1-hour chart, 30-minute chart, 20-minute chart, 15-minute chart, 10, 5, 4, 3, 2, 1. Now, you might think this is overkill, but if you think about it, what we're doing is we can see something roll up from the 1 all the way through and vice versa, and that gives you an edge. So the problem with this, obviously, is that, you know, that's a lot of charts to look at, and that's just the spiders. And if you're trying to look at that on multiple symbols, the human brain can only process so much. Not only are you going to miss stuff, it's just it's not easy, okay? And in trading, it really needs to be easy. So this got me to thinking about, you know, first of all, are those hidden time frames, or can we look at those? How many time frames should we be watching? Is this cascading effect important? You know, the rolling of time frames and the other one. And then how do we take this at a glance? And so this is where Eric comes in. If you guys are familiar with Eric, he's just a really, you know, look, the guy was a fighter pilot and a nuclear physicist. So if I've got a question about an indicator, I'm confident that he can come up with a solution. So this is what he developed. You'll notice here, I'm looking at a 1-minute chart, which I never, ever look at. Like, I don't care about the 1-minute chart. However, now with this tool on a 1-minute chart, I can see the 5 and 21, okay, EMA. So you can see right here, see the purple just crossed the white. The 5, 21 just crossed positive, okay, on the 1-minute chart. Now, I never watched the 1-minute chart. I would never know that. But now with Eric's tool, I can see there's a highlight. We just changed from red. We're about to go to green. That's what that yellow means. It's like, wow, that's crossing. Okay. And so these are the NASDAQ futures. And so in the NASDAQ futures, I love watching this on the futures or the Qs, because obviously the indexes are going to drive a lot of stocks, right? And so what happens here is that, you know, when we're coming down and everything's negative, now remember here what's happening. Yeah, guess what? The 30-minute through the monthly are all positive. So this morning, it's like, oh my God, the NASDAQ's down 40 points. People are going to be scared. But what we know is that the larger time frames are positive. This is just a little temporary pullback. And the thing that's going to tell us that this pullback is over is the 1-minute chart rolls. Now, it doesn't mean that this can't roll over and die, but guess what? You can buy it here and put your stop loss here. You can trade with incredibly tight stop losses, so you can trade larger positions. So that's the whole key with this. And so you can see here on something like this, now what happens is that, you know, as you get your position, right? You get your position on the 1-minute cross, you place your stop, which is pretty tight. And then when the 2-minute crosses, you're like, man, I am good to go. All right. And then the 3-minute crosses, and it's like, okay, things are looking really good. And at this point, you can bring your stop up from the lows to the next swing low. All right. So now you're protecting your risk. And then as the crosses continue to move higher, it's giving you confidence, because what I'm looking for is that these essentially meet in the middle, right? And then you get a row of green and you're just off and running. So that's the goal with this, because it's these rolls that actually cause some of the most profitable moves on the day. All right. So if we go back here and we look at, let's see, what was it? Amazon. Was it, did we look at Amazon? PayPal. Oh, I didn't look at Amazon yet? Oh, man. Okay, I'm embarrassed now. I'm going back. There it is. Okay, so there we go. All right, so here's what we did yesterday then, using that same thing. Yeah, and I will jump in and answer some of these questions here too. So here's Amazon, right? So yesterday, Amazon gaps down. Now, we know already that Amazon is a strong stock, okay? We also knew that, we've got all these major time frames in an uptrend. What happened this morning is that I think it was the 15 through the 1 turned red. And then once the 1 and the 2 went positive, which was right about here, we started buying call options on Amazon. Okay. So what happened then, we started buying call options, doing some put credit spreads. And then here we went from like 1708 to 1717, right? So that's a $9 move, which is pretty sweet in options. But the real payoff is, man, is this thing gonna keep on going? So we're consolidating. And I'll talk about this bottom indicator, but this bottom indicator is telling you which time frames have a squeeze, okay? And so what happened then is like a 5-minute squeeze developed on Amazon, and it broke out. And now these options